Hi everyone, welcome to another Weekly Forex Forecast for the week ending October 16th, 2020. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the EURUSD, the Pound USD, the Dollar Yen, the Australian Dollar versus the US Dollar, as well as gold or XAUUSD. Gold broke out last week, and I think the Dollar Yen is getting close to breaking out as well, along with the EURUSD and the Australian Dollar. So we'll get to all of that and more in today's forecast, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. So first up we have the EURUSD, and this one has been consolidating now for several weeks. This is something that I've left alone ever since we came off of that 119.50 area. So I was long back here for out of this consolidation and rode that position all the way up here to when we started to sell off from this 119.50 area. Now since that time you can see we've had a lot of sideways price action through here, and we also retested that 116.15 area recently, and we're coming off of that area fairly strong right now. So one thing to keep in mind here is that the uptrend is very much intact. I know a lot of people are looking for short opportunities up here, but given the higher lows and also the higher highs over the last few months, this is something I'm looking to buy right now. And furthermore, if we look at the monthly time frame, you can see where the EURUSD is still holding above that multi-year trend line from this 2007 high. All right, so we have this high back here, connects with this one, this high, and also this high. And the EURUSD broke out from this pattern and is holding above that as of this video. Now, last month did carve a bearish engulfing pattern. However, as I've been saying, this may only produce a pullback into 114.50 if at all. So we could see a pullback here into 114.50. Notice how it was resistance back here. It then turned to support through here and then resistance again and resistance on this candle. So this rally here may stall out and we could see a pullback into 114.50. But over the long term, I'm still bullish the EURUSD. So looking at the daily time frame, one thing I'm keeping an eye on is the potential for a descending channel here, also known as a bull flag. Now, whether the top of this level comes in around here, around some of these recent highs, or a little bit higher up is unknown as of right now. But if we use these two lows back here for the bottom of this channel and connect the upper level with this high, you can see where it intersects with that 1950 to 1960 area. So this is something I'm going to keep an eye on, not to short the pair, but to see how it reacts up here, because if we do get a rejection from this area, that could be an indication that this pattern is in play and that a break above this 119.60 area could trigger a continuation of this uptrend. So all in all, I think we may have to wait another few weeks to figure out what the euro is going to do here. But given the uptrend and also this sideways consolidation within that uptrend, I do like the idea of looking for buying opportunities following a breakout from this consolidation. The pound finally broke above that 129.80 area last week. As you can see, we had this close above 129.80, which was serving as resistance for several weeks prior. Now, the one thing about this is that it was a Friday breakout. All right, so it's going to be key to see buyers come in and defend 129.80 as support this week. If they do, and the pound stays above 129.80 on a daily closing basis, we could see a push up into that 132.60 area. Notice how it was resistance back here, resistance on this candle, and then served as support a couple times here. Alternatively, if we see the pound close below 129.80 again, so if we come down and retest this area and then close the day below it, that could indicate that this was a false break and could send the pound lower, perhaps back here to test the 126.70 area. However, one thing to keep an eye on is, and I pointed this out last week, is the monthly time frame is hinting at a massive falling wedge pattern over the last 20 years. So this is something to keep a very close eye on because it does indicate an eventual push higher. Now, just like the EURUSD, we do have a bearish engulfing month last month. So whether or not we come up and invalidate that pattern or push lower before we break out from this is anyone's guess. But right now, this is something I'd keep an eye on, because if the pound comes up and starts to retest this area and then just hover below it, that could be an indication of an imminent breakout. Just keep in mind that this is the monthly time frame, so this could take several months before we see any type of meaningful developments. But as far as the daily time frame goes, it all comes down to whether or not buyers can keep the pair above 129.80 in the coming week. If they can, that 132.60 area is exposed. I've been discussing this dollar-yen wedge pattern over the last few months. So you can see where we have on the monthly time frame, we have this lower level that extends from this low back here in 2015, 2016, and it connects with this one here, and then also a few lows through this area. Now the upper level extends from the 2015 high. You can see where it connects with this high right here, as well as several highs recently. Now, one thing to keep in mind with this pattern is even though we have several wicks that extend beyond the pattern, it never did close above or below it despite all of these upper wicks and also this lower wick down here. Now, the dollar yen did close below this wedge pattern here a few months ago. And you can see where once it did that, this 106 to 106.50 area has become resistance. Now, even though the pair has just been going sideways, there is something developing on the daily time frame that could trigger a breakout over the coming sessions. So moving to the daily, and I talked about this last week as well, we have this trend line from the 2020 low that connects with some of these recent lows, including this one right here. And this one is key because if you'll notice, look where the dollar yen sold off last week, right at that 106.10 level, which is the underside of that trend line. And we also got a nice sell-off here on Friday. Now, this is a bit speculative, but if you use a short-term trend line from this recent low, if the dollar yen closes below this trend line, that could trigger a retest of that 104.20 area over the coming week. Notice how 104.20 has been support here for the last few months, but given these lower highs into this support area, I wouldn't be surprised to see a breakdown here over the next few days or weeks. A lot of times whenever you get lower highs into a support level like this, it is an indication of an imminent breakdown. Now, if the dollar yen can close below 104.20 over the coming weeks, that could expose that 101 target I've been talking about. So looking back at the monthly time frame, you can see where 101 was resistance back here. It then flipped to support, was support again through this area, and support again recently. But the bottom line here is that as long as 106.50 holds as resistance and we do finally get a breakdown from this sideways price action, I do like the idea of a push lower into that 101 region. The only thing that would negate this idea would be a monthly close above that 106.50 to 107 area. The Australian dollar isn't as attractive as the euro or the pound. However, we do have this short-term trend line from this recent high that I'm going to be keeping an eye on just to see how the pair reacts. So we have this trend line from this high that connects with these highs here, and you can see where Friday retested that trend line. We also have this 72 area, which could serve as support. Notice how it was resistance back here and then support on this candle. So we'll see if 72 can hold that support and also if the pair can close above this short-term trend line. If they can, that 73.20 area would be exposed, followed by that 74 area or just above. And just like the euro and the pound, we do have this uptrend that's in place. So I'm only interested in buying the Australian dollar because as of right now, even though we did see a bearish engulfing month last month, I'm not seeing any indications of an imminent rotation lower. Instead, we're seeing this strong push off of the 70 handle where the Australian dollar is coming back to retest some of these recent highs. So again, I don't like this as much as the euro or the pound, but this short-term trend line could be something to keep an eye on over the coming days, as a break above it could indicate the next leg higher. Gold, or XAUUSD, finally broke out on Friday, but again, just like the pound, this was a Friday breakout. So it's going to be key to see buyers come in and defend this 1910 area. Notice how it was support back here, it then flipped to resistance. That means going forward, it should serve as support. Now, notice how 1910 is also the intersection of this trend line from the 2075 high. So this is now a confluence of support that must hold in order to push gold higher up toward that 1970 area, followed by 2015 and perhaps 2075. And last week's breakout is something I've been talking about now for a while. I've actually been bullish gold ever since April, and you can see where we have this uptrend that's been in place ever since 2016. So this consolidation here looked like a continuation pattern to me, and so far Friday's breakout is evidence of that. The only thing that's going to negate this is if we see XAUUSD close back below 1910. So if we see a rotation lower this week and a close well below this 1910, perhaps 1900 area, that could indicate that this was a false breakout. But as of right now, as long as 1910 holds on a daily closing basis, I like the idea of a push higher into 1970 and a continuation of this uptrend that's been in place for several years. And ultimately, over the long term, over the next few years, I do like gold much, much higher. I think that $2,000 is only a starting point, and that we could see gold trend higher toward $2,500, if not $3,000 over the next few years. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.